Inox Wind. They reported numbers. To discuss the numbers and way forward, we have Devansh Jain, Executive Director at the InoxGFL Group, joining in now. Thank you very much, Devansh, for joining in. This is Reema here. First, very quickly, if you could tell us, were there any announcements in the budget which impacts you, positively or negatively?
Look, I think it's a very forward-looking budget, and I think they've been very clear about the national clean manufacturing mission. So I think they've reiterated their commitment to setting up a very large domestic ecosystem for wind turbines, for solar, green hydrogen, electrolyzers. And I think that that shuts out a lot of the noise which has been created over the past couple of weeks, I would say, around the US president's statements around renewable energy. In any case, on the wind side, we're fully domestically focused. So I think we're looking forward to a very, very strong renewable outlay as we move forward.
Devansh, that's right. Quite a few worries, and quite a few of the wind energy stocks actually saw quite a bit of a sell-off on the back of those statements coming from Trump himself. Well, let's talk about the quarter itself. A very strong quarter for you, especially in terms of operating margins. Can these margins sustain? What is the margin outlook for the rest of FY25? So where will you end FY25 at, and what is the targeted margins for FY26?
Look, yes, I think it's been another strong performance with 190-odd megawatts this quarter. It's been the highest ever EBITDA and PAT for Q3 in the company's history. We've done about 290 EBITDA and 112 PAT. Having said that, I was fairly clear in saying that we maintain our 800 megawatt guidance for this year and our 1200 megawatt guidance for next year. Of course, with the caveat that we could further upgrade it for next year. We had given out a margin guidance, which we had kind of upgraded twice over the course of the past 3 or 4 quarters. And, I don't think we wanted to just keep revising our margin guidance every quarter and just make it a normal affair. So effectively, I think we didn't want to give out any specific indicator for Q4, but I think we are on track to beat our margin for FY25 substantially. And I think it's just common sense for people to be able to kind of extrapolate and see where we are headed for FY25. For FY26, while our current margins, which we've guided for, was 17% plus, with the caveat that we would further upgrade as we move forward, the fact is we're adding a lot of new things to the portfolio. One, we're bringing in internalizing all our crane requirements, which start ramping up from Q4. We also have a transformer manufacturing line, which is going live in Q4. And I think these, along with some of the new products, our 4X turbines, which we're launching next year, a lot of these should aid our margins further as we move forward. This is again, besides the fact that within the group, we've now launched Inox Solar, which is only going to lead to more and more opportunity for Inox Wind by partnering and taking part in many of the FDRE and hybrid tenders. Plus, it increases visibility and profitability from our EPC arm and the O&M arm, which is under Inox Wind.
Okay, so you've maintained a couple of guidances that you had given. The other, what we have to keep an eye out for is the fact that when you're talking about execution, 140 megawatts per quarter was the kind of execution you were actually doing. You've maintained your execution guidance for FY26 as FY25 as well as FY26 with an upside risk as far as the margins are concerned of 17%. So going forward, what will be the quarterly run rate we can expect in terms of execution? And number two, is order book accretion a bit of a worry? H1 was slightly muted. How is H2 panning out, and how is FY26 panning out?
Look, I think, as I mentioned, in terms of execution, typically it's not a uniform quarter, this business, right? We typically do about 35-40% in H1 and about 60-65% in H2. Yes, it's not lopsided to Q4, as it used to be historically under the feed-in tariff regime. But yes, given it's been a fairly massive ramp-up year for us, where year-on-year our volumes have grown almost 96%, obviously Q4 is fairly large. But given the fact that we've publicly guided for about 1,200 megawatts next year, I think, and looking at where we are headed in Q4, I think that should be a large indicator of what every quarter broadly should look like in FY26. In terms of order bookings, honestly, we've taken in about 1.4 gigawatts of orders over the course of the past couple of months in this financial year. Our current order book is 3.3 gigawatt. And what we've guided for was about 1,200 in FY26 and say 2 gigawatt plus from FY27, looking at the market expanding. Now, the longest order book you can build in this sector is 2 years, because that's the longest lead time you get to execute a project, be it CII, IPPs or PSU tenders. There is no point in us announcing orders which are, over 7-8 years, which are MOUs, which are just LOIs, which no binding agreement or no firmness or not credible parties. I think that is the difference between us and some of the other players in the sector. Having said that, I think I've always said in every, taking in orders has been the least of our worries. We continue to build on our order book. We've just added a couple of orders from Continuum and Hero this year. We've recently got Serentica into the books. We are very selective in terms of the quality of customers we're now adding. I think there's a very strong visibility. There are multiple PSU tenders. Some of them had been delayed given this was an election year. I think we should see a lot of them coming out also over Q4 and Q1. So honestly, given that we're sold out, if I may say so, over the next 2 years, that's probably the least of our worries.
Completely sold out for the next 2 years? Is that what you said?
Broadly, if that's the terminology, given our current manufacturing capacity, which of course we are ramping up. But yes, in terms of guidances,
there are a lot of PSU tenders upcoming, right, in Q4 and Q1 of FY26. Could you give a ballpark indication of the size? What is your estimated success rate in that you anticipate?
Look, I don't think I'm going to spell out success rates. I think we're selective in the tenders in which we participate. But I would expect over the next 2 quarters, we should see at least 7 to 8 gigawatts of hybrid FDRE tenders being awarded out. And, wind would be about broadly half of that at least.
Okay. All right. Just a quick word, Devansh. There is a lot of concern globally about Trump, and he seems to be targeting renewable energy and particularly wind power in particular. What have you made of those headlines, and will there be any impact on a company like yours?
Look, first and foremost, I think rather than just getting carried away with headline statements, first and foremost, there is no impact of Trump's policies on players like us, which are fully focused on the Indian wind sector. We do not depend on exports. We are not, 100% of our business over the past, I would say 10 years or the past 5 years has all been India. So we have zero impact of Trump's policies on India. Having said that, I would like to reiterate the recent budget maintains heavy focus on RE capacity expansion. There has been enough and more noise around Modi ji's targets, around the clean manufacturing sector, around our net zero targets, and I think all the policy movements have been very positive and reduce this entire uncertainty. For various other parts of the renewable pie. As I mentioned, the wind sector is completely domestic, so we have zero impact. But with respect to other pieces of the pie as well, I think India focusing on its domestic requirements and getting in place what I would call domestic content requirement kind of policies would completely insulate the Indian market to a great extent. Of course, the export markets are a different ballgame, but like I mentioned, in Inox Wind, we are fully focused only on the domestic wind market.
Right. Thank you so much, Devansh, for joining us on an important day just post-budget. Your views on the budget, quarterly performance, as well as the way forward for FY26. Love to have you soon for another quick chat.